Bharat welcomes the world to a new era of creativity. Waves, World Audio Visual and Entertainment Summit. Connecting creators through Creative Sphere. Wave Accelerator. Waves Bazaar.
Where stories, ideas and content go global.
Connecting countries through global media dialogue and Bharat Pavilion.
Shaping narratives and partnerships. Culture, cinema, gaming. Waves fuels the next wave of entertainment.
Connecting creators, connecting countries. Waves 2025.
This is India's #1 news network and you're watching News9. English news as it should be.
A very good morning. You are watching News9. I'm Karthik Malhotra, and what a dramatic U-turn Donald Trump has made again. There's a pause on higher tariffs for a period of 90 days, but the baseline of 10% continues to stay. Markets across the world are rejoicing, US and Asian markets, but a market holiday in India today. We'll get you all global and Indian stories. You're watching Morning Brief at 9. This is Morning Brief at 9. First up, let's get you all the headlines making news this Thursday morning. Will he, won't he, and how long before he unpauses? Donald Trump makes a U-turn on higher tariffs on more than 70 countries, but the baseline 10% tariff to stay in effect. The pause on higher tariffs for a period of 90 days. But there's one notable exception in the pause, and that happens to be China. US and China trade war intensifies. Not just no pause, but a higher levy on Chinese imports. 125% is what US will impose on Chinese imports. But the big question now is, will the European Union retaliate with staggered tariffs on $23 billion worth of US imports into the European Union region? This decision on the vote on increasing tariffs had come just before Donald Trump's pause on tariffs. US markets soar on Trump's tariff pause. The S&P 500 up almost 9.5%. Tesla stock up 23% in trade. But curiously and mysteriously, just 4 hours before announcing the pause on tariffs, Donald Trump posted on his social media platform Truth Social saying, "Great time to buy." The question is, did Donald Trump manipulate his own DJT stock? Well, continuing with the stock story, Asian markets rejoice on a 90-day tariff hiatus. Even China and Hong Kong edge up in trade on Thursday, despite a 125% tariff on Chinese imports. And as Indian markets are closed today, we thought this would be a good day to tell you 6 terms related to stock market that you as an investor or trader must know. In domestic stories, Finance Minister NIRMALA SITHARAMAN has said that there is eagerness on both sides as she concludes her talks on India-UK FTA in London. The Reserve Bank of India yesterday cut interest rates. 4 public sector banks cut lending rates. Let's start first with a major move, this time coming again from US President Donald Trump, as he said he's pausing his reciprocal tariffs on many countries for now. The 90-day pause gives some nations a temporary exemption, but not China. Trump announced a sharp escalation in his trade fight with China, raising tariffs on Chinese imports to a staggering 125%, up from 104%, which had taken effect just yesterday. This comes as China had tried to retaliate. Remember, Trump's latest move of 125 wasn't out of nowhere. It follows China's own warning that it would raise tariffs on U.S. goods to 84%, more than doubling the previously announced 34%. Let's take a look at all these details in this report.
U.S. President Donald Trump on Wednesday announced he would pause his reciprocal tariffs on many countries for 90 days, but he raised tariffs further on imports from China. The announcement came less than 24 hours after steep new tariffs kicked in on imports from dozens of trading partners.
Well, I thought that people were jumping a little bit out of line. They were getting yippy, they were getting a little bit yippy, a little bit afraid.
U.S. stocks surged following the announcement, with the benchmark S&P 500 climbing more than 9%. Trump's tariffs had hammered markets, raised the odds of recession, and prompted retaliatory responses from China and the European Union. Trump said he would raise the tariff on Chinese imports to 125%. From the 104% level that took effect at midnight, further escalating a high-stakes confrontation between the world's two largest economies. He said he would at the same time suspend targeted tariffs on other countries for 90 days to allow time for U.S. officials to negotiate with countries that have sought to reduce them. A 10% blanket duty on almost all U.S. imports will remain in place.
Nothing's over yet, but we have a tremendous amount of spirit from other countries, including China. China wants to make a deal. They just don't know how quite to go about it. It's one of those things they don't know how quite. They're proud people. And President Xi's a proud man. I know him very well. And they don't know quite how to go about it, but they'll figure it out. They're in the process of figuring it out, but they want to make a deal.
This is chaos. This is government by chaos.
The top Democrat in the U.S. Senate, Chuck Schumer, blamed Trump for hurting the country, but said he was gratified by the president's latest move.
Donald Trump is feeling the heat from Democrats and across America about how bad these tariffs are. He is reeling, he is retreating, and that is a good thing. We are going to continue to put the heat on him because there are still much damaging tariffs in place.
Since Trump announced broad tariffs late on April 2nd, stocks had fallen more than 12% for their biggest four-day sell-off in 5 years.
And remember, just days ahead of Trump's 90-day pause announcement, the European Commission had announced that it has secured the support of all 27 EU countries to go ahead with the first set of countermeasures or retaliatory tariffs against the US, and especially US President Donald Trump's tariffs on steel and aluminium. The measures, which will take effect from April 15th, include 25% duties on a range of US imports. The European Commission had proposed these countermeasures earlier this week, aiming to address the impact of Trump's tariffs. But the question now really is, with Trump's U-turn on these latest tariff stance, will the EU go ahead with its countermeasures? And not surprisingly, Wall Street soared on Wednesday as the S&P 500 surged 9.5%, making its biggest one-day gain since 2008. The rally was sparked by President Donald Trump's surprise announcement of an immediate 90-day pause on tariffs on many countries, offering a temporary relief to investors. Now, as tech stocks led the charge among the so-called Magnificent Seven, Tesla skyrocketed more than 22%, while Apple and Meta platforms each jumped around 15%, giving a boost to a powerful rebound across major indices. Take a look.
U.S. stocks soared Wednesday after President Trump's stunning reversal on tariffs, with the Dow climbing nearly 7.9%, the S&P 500 surging a whopping 9.5%, its biggest one-day percentage gain since 2008, and the Nasdaq skyrocketing more than 12%, its largest percentage gain since 2001 and second high. Trump on Wednesday said he would temporarily lower the hefty tariffs he had just imposed on dozens of countries while hiking tariffs on China. His turnabout followed the most intense period of financial market volatility since the early days of the pandemic. Brian Mulberry is client portfolio manager at Zacks Investment Management.
We get certainty when we have clear rules on what the cost of capital and the cost of doing business is going to look like. We got a little bit of that today with a 90-day pause in tariffs. Now we only have to deal with basically a 10% baseline tariff. That creates a much more certain outcome in terms of the cost of goods, what trade will look like, and obviously much less of an impact on consumers.
Also helping investor sentiment was the U.S. Treasury's $39 billion 10-year note auction, priced at a high yield of 4.435% and showing solid investor demand. Stock high flyers Wednesday included Delta Airlines, which soared over 23% after the carrier beat first quarter profit expectations. Shares of United Airlines surged more than 26%, and American Airlines jumped more than 22%. Microchip technology surged 27%, and fellow chipmaker NVIDIA gained more than 18.5%. Among other Magnificent Seven stocks, Tesla climbed over 22%, and Apple and Meta Platforms each added about 15%. Also on Wednesday, minutes from the Federal Reserve's meeting last month were released. Policymakers were nearly unanimous that the economy faced risks of higher inflation and slower growth. Thursday's Consumer Price Index will offer more clues on the direction of inflation and interest rates.
All right, and staying with markets, Donald Trump offered some financial advice just as the stock market in the U.S. was opening on Wednesday morning. Stocks were wavering between gains and losses, but that was about to change with this message on Trump's social media platform, Truth Social. Look at what it reads. It says, "This is a great time to buy DJT." He posted at 9:37 a.m. U.S. time. Now, less than 4 hours later, Trump announced a 90-day pause on nearly all his tariffs. Stocks soared on the news, closing up 9.5% by the end of trading. The market, measured by the S&P 500 at least, gained back about $4 trillion or 70% of its value it had lost over the previous 4 trading days. Now, it was a precinct call by the president, maybe too precinct. The question is, was Trump already contemplating the tariff pause when he made that post? Let's look at that post again. The curiosity of posting was Trump's sign-off with his initials DJT, Donald Jr. Trump. But DJT is also the stock symbol of Trump Media and Technology Group, the parent company of the president's social media platform Truth Social. That stock moved up over 20% in trade on Wednesday, soaring twice as much as the broader market and reflecting a stunning performance by a company that lost $400 million last year and is seemingly unaffected by whether tariffs would be imposed or whether they would be paused. Now, Trump's 53% ownership stake in the company, now a trust controlled by his oldest son, Donald Trump Jr., rose by $415 million on the day. The question we leave you with is, if this is not stock manipulation, then what is? All right, let's move on to Asian stocks now. Asian shares surged in trading early morning with the Japan's Nikkei 225 index jumping more than 2,000 points almost immediately after the Tokyo Exchange opened as investors welcomed President Donald Trump's decision to back off on most of his tariffs. On your screens right now is Japan's 225. Look at the sea of green. Now, analysts had expected the regional comeback given that US stocks had one of their best days in history Wednesday on a euphoric Wall Street where investor hopes had run high that Trump would tone down the tariffs. Now, the Nikkei 225, which is on your screen right now, jumped 8.2% in morning trading. Let's look at South Korea's Kospi. In fact, we will bring you South Korea's Kospi there on your screen now. South Korea's Kospi had gained as much as 4.9% in trade. Let's move on to Hong Kong's Hang Seng. Remember, this was one index which was battered in trade as tariffs were announced on the 2nd of April. In fact, this index had lost as much as 13%, but the Hang Seng added 2.8%. And not just Hang Seng, but mainland China's Shanghai Composite also edged up 0.6% despite a tariff hike on Chinese imports 125%. Now, fears of Trump's trade war dragging the global economy into recession linger, but his posting on social media that investors worldwide had been waiting for and wishing for, a 90-day pause, came in to the relief of investors. Now, in the US, the rally pulled the S&P 500, and we were on that heat map some time back, but the S&P 500 index has been now moved away from what was earlier feared to be a bear market. And that's what professionals call it when a run-of-the-mill drop of 10% on US stocks, which happens almost every year or so, graduates to a more vicious fall of 20%. The S&P 500 index is now down just 11.2% from its record highs. So let's stay on with Donald Trump and Trump tariffs, and let's just look at the journey of how these tariffs and the seesaw and the U-turns that have come around in just 1 week. Remember, 2nd April is the date when tariffs were announced by US President Donald Trump in that fancy style of holding the placard, and he said that there's going to be a 10% baseline tariff on all imports into the US and higher duties on some other countries and the biggest trading partners that had rattled global markets. First, let's look at what Donald Trump said on the 2nd of April.
If you look at that, China, first row, China, 67%. That's tariffs charged to the USA, including currency manipulation and trade barriers. So 67%, I think you can, for the most part, see it. Those with good eyes, with bad eyes. We didn't want to bring, it's very windy out here, we didn't want to bring out the big charts because it had no chance of standing. Fortunately, we came armed with a little smaller chart. So it's 67%, so we're going to be charging a discounted reciprocal tariff of 34%. I think, in other words, they charge us, we charge them less. So how can anybody be upset? They will be, because we never charge anybody anything, but now we're going to charge. European Union, they're very tough, very, very tough traders. You know, you think of European Union, very friendly. They rip us off. It's so sad to see. It's so pathetic. 39%.
39%. And well, that was Donald Trump on the 2nd of April. Now cut to just 2 days after that. And you know, on social media, as they say, this is how it started, this is how it's going. We're trying to do that for you. So 2nd April, you just heard. Now let's look at April 4th. Just days after announcing sweeping 10% baseline tariff on all imports, President Trump made another announcement on April 4th, which revealed that the pharmaceutical industry would soon be facing tariffs, and the kind of tariffs never seen before. Let's listen into that 4th April take from Donald Trump.
The chips are starting very soon. The pharma is going to be starting to come in, I think, at a level that you haven't really seen before. We are looking at pharma right now, pharmaceuticals, as a separate category. And we'll be announcing that sometime in the near future, not too distant future. That's under review right now.
All right, so that was Donald Trump talking for the first time, saying that the pharma industry is not exempt from tariffs and tariffs are going to come and hit the industry soon. And then on April 8th, which is technically just yesterday India time, Trump reiterated that the US is planning to announce a major tariff on pharmaceutical imports into the US, a move that rattled India's pharma industry as well. Listen to what he said just yesterday, technically India time.
We have to do, we're going to tariff our pharmaceuticals, and once we do that, they're going to come rushing back into our country because we're the big market. The advantage we have over everybody is that we're the big market. So we're going to be announcing very shortly a major tariff on pharmaceuticals.
All right, and just yesterday again, making a U-turn, Donald Trump announced a 90-day pause on tariffs for all countries except China. Take a look.
Well, I thought that people were jumping a little bit out of line. They were getting yippy, you know, they were getting a little bit yippy, a little bit afraid. Somebody had to do what we did, and I did a 90-day pause for the people that didn't retaliate, because I told them if you retaliate, we're going to double it. And that's what I did with China, because they did retaliate.
All right, so retaliating on China, now tariff war between the US and China is intensifying, with both sides standing firm in their positions after China slapped an 84% tariff on all US goods. President Donald Trump wasted no time in announcing an immediate increase in US tariffs on Chinese imports to 120% from the previously already escalated 104%. Take a look.
A deal's going to be made with China. A deal's going to be made with every one of them. And they'll be fair deals. I just want fair. They will be fair deals for everybody, but they weren't fair to the United States. They were sucking us dry, and you can't do that. Bond market is very tricky. I was watching it. It's beautiful. The bond market right now is beautiful. But yeah, I saw last night where people were getting a little queasy. I think everything had. Well, the big move wasn't what I did today. The big move was what I did on Liberation Day.
All right, and just before this increase in tariffs on China, US President Donald Trump also lashed out in remarks mocking world leaders and rebel Republicans amid escalating trade tensions. Now, at an event, Trump claimed countries were calling up and kissing his. We'll just listen to what he said. I don't want to say that word on air. To make a trade deal and dismiss critics suggesting Congress should lead negotiations. Listen in exactly to what Donald Trump mocked and how he mocked global leaders.
Don't let some of these politicians go around saying, because I'm telling you, these countries are calling us up, kissing my ass. They are dying to make a deal. Please, please, sir, make a deal. I'll do anything. I'll do anything, sir. And then I'll see some rebel Republican, some guy that wants to grandstand, say, I think that Congress should take over negotiations. Let me tell you, you don't negotiate like I negotiate. Congress takes over negotiating. Sell America fast because you're going to go busted. You don't. I just saw it today. A couple of your congressmen said, I think we should get involved in the negotiation of the tariffs. So that's what I need. I need some guy telling me how to negotiate.
All right. Well, that is Donald Trump for you, and the sea change that we've seen in exactly 1 week, how it started on April 2nd and how it transpired until early morning today. Well, joining me to discuss who is this man, the so-called leader of the free world, Donald Trump, is Mr. Rakesh Kar, editor, News9 Mediaverse. Mr. Kar, good morning. Thank you so much for joining us here early morning. I know we pulled you out of your walk regime, but I mean, this news and this U-turn that Donald Trump made really required somebody like you to help and put this in perspective on what's really going on in the world and what's going on inside that mind of Donald Trump.
Good morning, Karthik. Thank you for having me on the show. Once you were putting up these series of bites from Donald Trump, I was reminded of the verbal diarrhea that one can imagine Donald Trump to be having. But, this particular episode of Trump driving the world crazy is insane, actually. But, on a lighter note, I am reminded of the very famous dialogue of Shah Rukh Khan, "Ye 70 minute Jeevan ka khel hai," from the very, very famous movie Chak De India. So this 90 days, will it get the world economy to stand up and, remove the bruises and be on its feet? Hopefully, yes. Hopefully, unfortunately not if Trump continues to be the eccentric that he is. If he settles down with what he has said so far, the latest announcement, then I guess there is hope. These 90 days should give an opportunity for the global economies from left, right, center to try and make sense of what America is up to and what the overall economic order is, which has completely been disrupted by the last few weeks of Trump being, in control. Right. As the Hindi saying goes, "Jiski lathi uski bhains." I think Trump is the greatest example of that, and he symbolizes that, and we are all recipients of that in a very negative sense. As far as India is concerned, I'll come to India later, but I think one should not unduly get excited by, the entire volley of, attacks being intended at China, because China is the largest manufacturing partner to the world at large. China is the largest trading partner. So in that sense, that spider web will continue to hit hard most of the global economies. So it's not a bilateral fight of 125 versus 84% tariffs. It's bound to create a ripple impact on all countries, including India. So in that sense, Trump-esque, if we can call that phenomenon, is continuing to create undue disturbances all around the world in the economic order. Insofar as India is concerned, Karthik, to my mind, as I've been repeatedly saying, that I think we played our cards well. We were a little mature and didn't get swayed by, some amount of rubbing that Trump did in that press conference, which you were also referring to in your earlier telecast when Prime Minister Modi was there. I think dealing with him calls for some amount of maturity and not reciprocity. That's what India has done. I think we are in a very advanced stage of conversation with the US on the bilateral trade deal. And I do imagine that we will meet the scheduled timeline. Unless and until Trump has something more lethal to come up, which includes, as you rightly pointed out, the pharma piece. If the pharma piece is announced, as he said, as he has promised, then, again, there is a bit of a disturbance in the bilateral piece, which is everybody expects that to, so to say, calm down nerves when it comes to India-US challenges on the economic front.
Right.
Globally, again, pharma will be a major setback.
Right. I just want to understand from you, Mr. Carr, and this is something which is fairly serious. It's not an average Joe making a statement on social media. This United States, and policy needs a certain degree of certainty, and that is something that we are finding absolutely absent from the shenanigans of Donald Trump. I mean, one is not sure whether it is an investor on the street, whether it is somebody who's looking at exporting goods to China, I beg your pardon, to US, or this is somebody who's taking a large capex call of making investments in the US. I mean, how long is this volatility going to stay? And talk to me about the kind of disruption it's going to make, first to the US itself, which in any case is flirting with recession fears right now, and then to the rest of the world, because these are not easy decisions to make. These decisions require hardcore capital investment, and those investments need to come with a certain degree of certainty, and that's absolutely absent in the way Donald Trump is running his administration.
Quite rightly pointed out, Karthik. Policy, by definition means a set of people get together who are relevant stakeholders. In this case, even his established set of stakeholders are sort of skirting away from him, which is very unfortunate, which is destabilizing for Trump and US itself. And when US was said to be the panacea for all ills, lighting the right light for the world at large. If US is behaving the way it is and Trump is behaving the way he is not a policy. He's an individual trying to reimagine the world from his eyes. He believes that all the wrongs that have happened in the past, he is there to resurrect America and make it great again. But in the medium and short term, we definitely don't see any greatness happening in America. It is battling recession, it's battling inflation, it's battling bad will, it's battling, uncertainty and investors there, investors abroad, and this confrontation with, China. And it's not like a, street fight. Unfortunately, this entire trade war is degenerating into a street fight. And also the kind of language that is being used, kick my, ass, and all these don't, behove a global statesman, and least of all America, which is the most powerful country in the world. So we are indeed, set for more rounds of uncertainty. But the good news is that this 90-day pause was again unexpected. I frankly, Karthik, didn't imagine that he'll do it so fast. So maybe he's seeing some sense, or someone is telling him in his ear, hey, listen, Mr. Trump, you're the brightest man, but, please see reason, see pragmatism. You can't disrupt the world before you set it right.
Right, absolutely. I think that completely makes sense. There is somebody, hopefully Trump also heeding to that good advice, because I'm sure US has plenty of good advisors and people who understand economics, presumably better than Donald Trump. But I want to come back to this one very pointed question, a sharp question, Mr. Carr, and we're running out of time, so I'll request you for a short response on that. Is it fair to assume at this point that the real fight, the whole tariff war, is between US and China, and everybody else is pretty much nothing more than collateral damage, and that includes India?
It is pretty much a battle between China and US, but the collateral damage is not moderate. It's not modest. It's significant. That's what I'm saying. Let's not exult as a neighboring country that China is at the receiving end today. The whole global economy is so interlinked that we can't escape China being in trouble, US being in trouble. So we can't say that we are safely placed in the quadrant. Yes, in our bilateral relationship with US, we have, so to say, managed our ties diplomatically very well in crafting the bilateral deal, which should happen soon.
All right, Mr. Rakesh Kha, let's leave it at that for now. Well, we don't know how the sides are going to turn again, and we might be having another conversation online or offline during the day on other U-turns. Well, hopefully Donald Trump is sleeping right now, but let's see what happens when he wakes up and when markets open in the US. With that, we will slip into a very short break right here on News 9. More stories coming for you on the other side. You're watching Morning Brief at 9.
What does it take to be the greatest in the world? There is one thing which truly sets you apart. Your inner strength. Sodium DMD Rebar. True inner strength.
I need expert performance. I need my career.
Smash your way to glory at the News9 Corporate Badminton Championship. Get ready for the ultimate badminton showdown. News9 presents the biggest corporate championship, a battle of skill, speed and supremacy. Cash prize of 6 lakh rupees across categories. Venue, Pulela Gopichand Badminton Academy, Hyderabad. Dates, May 9th to May 11th. A chance to showcase your talent and make a mark. The court is set. Are you ready? Register now. In the age of OTT platforms, to watch or not to watch, that's the question. Because you are what you watch. It's our review, but your choice to skip it or stream it. Hello and welcome. I'm Krishna Kumar. This is Skip It, Stream It.
Back. You are watching Morning Brief at 9 right here on News 9. Well, we thought since Indian markets are closed today on account of Mahavir Jayanti and Asian markets are rising at levels we haven't seen in the recent history, US market up about 9.5%. We thought this would be a good day to familiarize you with, if you're not already familiar with, some of the terms that you would be encountering in print and your social media feeds. Bulls, bears, dead cats, all of these are lurking around in the background of what Donald Trump and his trade war is doing. Now, as the effects of his administration's latest tariff unfolds, news consumers may confront with these unfamiliar terms related to investments or even the capital market. So we thought it's a good day to try and demystify some of these for you and sort of make a guide of our own on some of these common words and common themes and common terms. Let's begin first with bear market. Now, what exactly is a bear market? Well, a bear market is a term used by Wall Street when an index such as the S&P 500 or the Dow Jones Industrial Average has fallen 20% or more from a recent high from a sustained period of time. Now, why use a bear to refer to a market slump? Well, bears hibernate, so they represent a stock market in retreat. In contrast, Wall Street's nickname for the surging market is a bull market. Why? Because bulls charge. So that's the first term for you, bear market. Let's look at the next term that we have for you today, and this is called a dead cat bounce. Now, what is a dead cat bounce? It sounds a little spooky, doesn't it? Well, when stock markets rebound briefly in a moment of free fall or uncertainty, it's known as a dead cat bounce. That's from a notion that even a dead cat will bounce when it falls from a great enough height. The market recovery tends to be temporary and brief, and the downturn seems to resume. Now, the third word that we want to familiarize you with today is capitulation. What is capitulation? Well, this refers to the point when investors give up on the idea of recouping their losses and sell, often out of fear and intolerance of falling prices. This tends to happen during times of low confidence and high uncertainty and volatility. Now, capitulation can sometimes indicate the bottom of a market, but it's easier to identify in retrospect. And now, a word that you're reading perhaps every day, which is a recession. What is a recession? Well, recession is a time when the economy shrinks and unemployment rises. Recessions are officially declared by the obscure-sounding National Bureau of Economic Research, a group of economists in the US who consider factors such as hiring trends, income levels, spending, retail sales, and factory output. Now, the Bureau's Business Cycle Dating Committee defines a recession as a significant decline in economic activity that is spread across the economy and lasts more than a few months. The organization typically does not declare a recession until well after one has begun, sometimes as long as a year later. In the days before Trump's most recent tariff took effect, economists at Goldman Sachs raised their assessment of the odds of the US experiences a recession from 35% to as high as 65%, but analysts rescinded that forecast Wednesday after the Trump administration announced a 90-day pause on the most of the levies. Now, there's one more term, and that is called buy the dip. You would hear stock market advisors and financial analysts say, buy the dip, buy the dip. What does buy the dip mean? Well, it refers to the purchasing of a stock or buying into the market right after it has lost value at a discount. The phrase is commonly used by retail investors. Now, unfortunately, it's all but impossible to time the market to know where the bottom will be and how long a recovery will take. Finally, let's bring you to the sixth term of the day, and that is called 10-year Treasury note. The 10-year Treasury bond yield is the interest rate that US government pays to borrowers of money for a decade. It's a key indicator of investor sentiment and economic conditions, and it helps set prices for all kinds of other loans and investments. The yield influences borrowing costs and signals expectations about inflation and economic growth. Now, historically, Treasury bonds are considered one of the world's safest assets. That means investors often buy them when there is uncertainty, which tends to lower the yield. Prices for the US 10-year bonds tend to fall when confidence is high and people buy assets perceived as riskier, which causes yields to rise. In recent days, however, investors have sold Treasury bonds, which has sent the benchmark 10-year yield up. That could point to a lack of consumer confidence in Treasury bonds themselves or any number of other factors. All right, with that quick guide on some of the terms on stock markets, we will slip into another short break, but more coming up on the other side. You are watching News9.
Smash your way to glory at the News9 Corporate Badminton Championship. Get ready for the ultimate badminton showdown. News9 presents the biggest corporate championship, a battle of skill, speed and supremacy. Cash prize of 6 lakh rupees across categories. Venue, Pulela Gopichand Badminton Academy, Hyderabad. Dates, May 9th to May 11th. A chance to showcase your talent and make a mark. The court is set. Are you ready? Register now.
Light, camera, and action. Kick back, relax, grab your favorite snack because News9 is here with your weekend dose of entertainment. It's time to take a deeper dive into the buzzworthy happenings of the entertainment world. From celebrity gossips to exclusive conversations, from nostalgic moments to News9's pick of the week, don't worry, we've got you covered here. And I hope you've grabbed your popcorn by now because News9's page 3 is here to serve you everything that we call entertainment. So do stay tuned every Saturday and Sunday, 2:30 p.m.
Welcome back. You're watching Morning Brief at 9 right here on News9. Well, Finance Minister NIRMALA SITHARAMAN has wrapped up the 13th Ministerial India-UK Economic and Financial Dialogue with her British counterpart, Chancellor Rachel Reeves, on a note of positivity and eagerness to conclude the bilateral free trade agreement negotiations soon. Now, negotiations for the FTA are going on. There's a great sense of positivity and also eagerness and a dedication to have this conclude sooner than later, is what Finance Minister NIRMALA SITHARAMAN has said in the statement. She also goes on to say that both sides, India and the UK, are happy to end the visit with a sense of hope and possibility and the spirit with which the engagement has taken place, particularly as regards the investment treaty and the direction that the FTA could potentially take. Well, it's not just NIRMALA SITHARAMAN. We also have a quote coming in from Rachel Reeves. But first, let's listen in again to what NIRMALA SITHARAMAN is saying. And she's saying that India wants to conclude and get over all the difficulties that they have had over the last few years in the matter of negotiating the free trade agreement, which has been pending for decades, and is hopeful and has added a certain degree of certainty that these FTA talks will conclude. And that seems to be the expectation coming from NIRMALA SITHARAMAN, the Finance Minister of India. Her counterpart in the UK Chancellor Rachel Reeves has reiterated that the UK government's commitment to continue to make rapid progress in a compelling deal is being recognized, as the importance of trade and investment is fostering economic growth for both India as well as the UK. Now, specifically talking about the free trade agreement, Rachel Reeves said that both the countries are trying to do what is best for the free trade agreement, and is compelling that India must look at reducing tariff and non-tariff barriers that suppress trade between the two countries. She also said that she believes free and open trade between countries, as does free flow of investment, and that's why they're seeking to reduce trade barriers with India. All right, and in news coming as a derivation of the RBI's repo rate cut yesterday, 4 public sector banks, Punjab National Bank, Bank of India, Indian Bank and UCO Bank, have announced up to 35 basis point reduction in lending rates within hours of RBI's decision to slash it by 25 basis points. Other banks are also expected to make similar announcements soon. Now, let's look at what these repo rates are. First, let's look at Indian Bank. The Chennai-based Indian Bank said that its repo-linked benchmark lending rate, or RBLR, will be lowered by 35 basis points now to 8.7% effective tomorrow, which is April the 11th. Meanwhile, Bank PNB has revised the RBLR from 9.10% to 8.85% starting from today, April 10th. Bank of India's new RBLR now stands at 8.85%, 25 basis points lesser than 9.10% earlier. The new rate would be effective from Wednesday. Now, Bank of India said in a regulatory filing. UCO Bank has said that it has brought down the repo rate link to about 8.8% in its repo-linked interest rate that it charges customers that borrow from the bank. Now, there are great expectations that other banks, will also follow suit. And let's move on now to other global stories that we are tracking for you this morning. Now, as the tariff war heats up between the US and China, China's Ministry of Commerce has announced that the country has filed a lawsuit against the United States with the World Trade Organization's dispute settlement mechanism. A spokesperson for the ministry said that US tariff hikes are a serious violation of WTO rules. The spokesperson called it a grave mistake, criticizing the US for its unilateral approach and labeling it as bullying. Now, China made it clear that it will firmly protest its rights under WTO rules and continues to stand by the multilateral trading system and international trade order. Meanwhile, earlier responding to US President Donald Trump's economic policies, French President Emmanuel Macron said, "We never wished for chaos." Listen in.
Things are simple. France and Europe have never wished for chaos or higher tariffs. We think it's a bad idea and a poor response to the trade deficit. We've also always said that we defend our economy, so if there are tariffs and they're at 20%, we will respond. But we believe that today's priorities lie elsewhere, that if we want to do more business, gain market share, we have to be more competitive, we have to continue the reforms, the work, we have to invest in innovation and succeed in these paths rather than impose tariffs. And so we want to see a reduction in tariffs.
All right, now just days, in fact, exactly a week after US President Donald Trump's announcement of renewed tariffs, which he has now taken back at least momentarily for a period of 90 days, this last 1 week had sent shockwaves through the US trading partners and global markets. Now, some countries are beginning to emerge as likely potential winners in this trade war. However, experts are now warning that the risk of a tariff-induced recession could limit any major gains. So which countries are positioning themselves to benefit from Trump's trade battle, and what challenges do they face moving ahead? This report tells you all.
If you look at that,
just days after President Donald Trump announced sweeping tariffs which shocked global markets, some of the US's allies like the European Union and Japan were among those hardest hit, with 20% tariffs or more. But which countries were emerging as potential winners in Trump's trade war?
we will impose a 25% tariff.
Rivals from Brazil to Egypt to Turkey see a silver lining. They could provide trade opportunities, while other countries are hit by much larger US levies. Brazil not only escaped with the lowest, quote, reciprocal tariff of 10%, but the agricultural giant could also benefit from China's retaliatory tariffs, likely to hit US farm exporters. Egypt too. A garments manufacturer there said Trump's move gives the country, quote, a very good opportunity to grow. That's as industry competitors Bangladesh and Vietnam, which both run big surpluses with the US, await 37% and 46% levies. And Turkey, whose iron, steel and aluminium exports took a hit from earlier US tariffs, now also stands to benefit as other global traders endure even higher tariffs. Despite a tariff of 26%, India is looking for opportunity in its Asian rivals' greater misery. According to a government report shared with Reuters, the sectors where India can gain US market share include textiles, apparel and footwear. India is also hoping to gain a bigger share of Apple's iPhone manufacturing from China because of the tariff differential. But the 26% tariff could still make the phone substantially more expensive in the US. Ultimately, however, the risk of a tariff-induced recession will limit the upsides for any international trader. Reuters Econ World podcast host Carmel Crimmins.
When the US economy suffers, everyone suffers. So, relatively speaking, there may be some winners, but in absolute terms, everyone's a loser.
The latest US tariffs came into effect on April the 9th.
The hopes that consumers might help lift the struggling $400 billion luxury industry are quickly fading. Growing fears that President Donald Trump's renewed tariff blitz could push the global economy into recession are putting pressure on the sector already in a grip of its worst slump in years. Remember, this report was filed just a few hours before Donald Trump had put a pause on higher tariffs in the world.
Luxury brands have endured their biggest slump in years. There was some hope wealthy Americans might pull the $400 billion a year industry out of its current lull. But fears have grown President Trump's tariff blitz will plunge the world into recession and hit the luxury sector. One Wall Street analyst now expects worldwide sales of luxury goods will fall by as much as 2% this year. That's down from a previous forecast for 5% growth. If it proves accurate, it would mark the industry's longest downturn in more than 2 decades. Trump's tariffs were more sweeping than many market players feared and led to retaliation from China. Shares in luxury sector leader LVMH are down 2% since the start of the year, while Gucci owner Kering has dropped close to a third, and Hermes and Cartier owner Richemont have also sunk. All eyes will be on LVMH when it kicks off first quarter financial reports on April 15th. Key rivals follow soon after with their own numbers. LVMH's Louis Vuitton had hoped sales growth from wealthy Americans would help offset weak demand in China. But signs of weakness emerged even before Trump's tariffs. Citi data released Tuesday showed US credit card spending on luxury brands fell 5% in March and February year on year. Some market watchers had warned at the start of April about growing luxury fatigue and falling US consumer sentiment. Groups like LVMH, Kering and Richemont are expected to draw on their brand's pricing power to shield profits from tariffs. But investors worry shoppers who can afford $10,000 leather handbags and gold bracelets could tighten their purse strings against a darkening economic backdrop.
All right, the United States will take back the Panama Canal from Chinese influence, reiterated the U.S. Defense Secretary Pete Hegseth on Tuesday during a visit to the Central American nation. More details in this report.
The United States will take back the Panama Canal from Chinese influence, said Pete Hegseth on Tuesday during the first visit to the Central American nation by a U.S. Defense Secretary in decades.
Together, we will take back the Panama Canal from China's influence. Together, with Panama in the lead, we will keep the canal secure and available for all nations.
More than 40% of U.S. container traffic, valued at roughly $270 billion a year, goes through the Panama Canal. That accounts for more than two-thirds of vessels passing each day through the world's second busiest interoceanic waterway, which the United States built more than a century ago and handed over to Panama in 1999. Trump has complained that it was a bad deal for the United States. On Tuesday, after talks with Panama's government and President José Raúl Mulino, Hegseth vowed to deepen security cooperation with Panamanian security forces. He said China would not be allowed to weaponize the canal by using Chinese firms' commercial relationships for espionage. That language appeared fine-tuned, talking tough but offering some assurances to Panamanians still unsettled by Trump's threats to reclaim the canal, while not ruling out using military force. Discontented Panamanians took to the streets in the capital Panama City on Tuesday in protest of Hegseth and Trump, as well as President Mulino, who they called a traitor and accused of giving away their sovereignty and self-determination. U.S. officials and experts say the United States has found a willing partner in tackling Chinese influence in Mulino, who in February announced Panama's exit from China's flagship overseas infrastructure plan, the Belt and Road Initiative.
All right, Elon Musk's Tesla has started selling electric cars in Saudi Arabia, but a country where on a 900-kilometer stretch of its main east-west highway linking the capital Riyadh and the holy city of Mecca, there isn't a single charging station. Take a look.
Tesla starts selling cars in Saudi Arabia on Thursday. It's a country where a 559-mile highway linking the capital Riyadh and holy city of Mecca has no charging stations. Electric vehicle sales in the kingdom totaled just 2,000 last year, according to industry data. But Saudi Arabia has huge plans for EVs that Tesla has not been able to tap. That's partly a feud between its billionaire CEO Elon Musk and the kingdom's powerful public investment fund. But relations between Riyadh and Musk have improved since he took a high-profile role in Trump's administration. In a coup for Riyadh, Trump is set to visit Saudi Arabia in the coming weeks in his first foreign trip. That's after asking the kingdom in January to spend upwards of $1 trillion on the economy over 4 years. Tesla's Saudi move also comes at a challenging time for the automaker. It posted a 13% drop in first-quarter sales earlier this month, its weakest performance in nearly 3 years. It was driven by a backlash against Musk's politics, rising competition and delays for a Model Y refresh. Saudi Arabia is investing an estimated $39 billion in developing the EV sector. But Musk has work to do in the region. Tesla's Saudi debut lags that of Chinese giant BYD, which opened its Riyadh showroom in 2024. And while it might not face angry protests seen in Europe and the US, a lack of charging stations is thought to be an issue, especially as the kingdom's summer temperatures can drain EV batteries more rapidly. Yet Riyadh has massive development plans, which include a goal of 30% EV adoption by 2030.
All right, now in a major diplomatic move, the NATO Secretary General has met with the Japanese Prime Minister in Tokyo, where the two leaders agreed to strengthen ties during this pivotal time for global security. Now, Rutte emphasized the growing threats from Russia's invasion of Ukraine. China's destabilizing activities in the Indo-Pacific and North Korea's illegal weapons program, highlighting that NATO and Japan will remain united to protect shared values of freedom and peace. Now, Prime Minister Ishiba added that the deepening relationship between Japan and NATO reflects the inseparable security of Europe, the Atlantic and the Indo-Pacific regions. Rutte also welcomed Japan's commitment to invest 2% of its GDP in defense by 2027, a major boost in military spending to boost global security. That's all we have for you on this edition of Morning Brief at 9. Remember, news continues right here on News 9. Thank you so much for watching.
Smash your way to glory at the News9 Corporate Badminton Championship. Get ready for the ultimate badminton showdown. News9 presents the biggest corporate championship, a battle of skill, speed and supremacy. Cash prize of 6 lakh rupees across categories. Venue, Pulela Gopichand Badminton Academy, Hyderabad. Dates,